Welcome, everyone. This is Roland Kim, your Vancouver go-to realtor for April 2026 real estate market update. Let's jump right into it. So March sales were down compared to last year. We had 2,032 transactions in the month of March, which is only a slight reduction versus the previous March in 2025, so down 2.8%, but you can see substantially down from 2024 and down nearly 31.8% below the 10-year average. So we are in a slower market, less sales. March saw new listings hit the market. A little bit less of new listings than March of 2025, but more listings than the year prior to that. So what we saw was brand new listings to the market in March was 5,920 new listings. That is down 9.7% compared to the March 2025, but again, up substantially over the 10-year average. Just because new listings might have been a little bit less pressured last month doesn't mean that inventory is not building. And for that chart, you can see here that inventory, meaning active listings available, in March was 14,774. That is up from the two previous years, up 6.3% versus last year, and a whopping 38% above the 10-year average. So we have a lot of active listings in the market. With regards to the balanced market, we are, yes, in a balanced market. The detached has a is at 11%, and the attached is at 17.2%, and apartments are 15.7%. So overall, we are in a sales to active ratio of a balanced market. I think it appears more balanced because there's less sales happening, but the sales that are happening are pretty substantially close to list price on some of the more active listings once they've or properties that have been listed several times are getting relisted at a much lower price than they initially started. It feels much more like a buyer's market right now, but statistically, I guess it is showing us a balanced market. Regarding the benchmark price is 1,104,300. If there was such a thing as a average property in the Vancouver marketplace. Regarding detached property, the average price right now is 1,854,800. That is down 8.2% year over year and up 1% versus the prior month. Regarding the apartment, the average price for an apartment in Vancouver is 706,700, which is down 7.8% year over year, down 2% month over month. In townhouses, the average price for a townhouse is 1,047,100, which is down 5.7% year over year and up 1% versus the month prior. We have a pretty calm and negative forecast for the BC economy. The GDP growth is near our lowest trends, other than when we had the 2008 recession or this beginning of COVID. And the challenge on that is there's no real recovery on the horizon. And so it appears like we're going to continue to be experiencing some of the lowest growth that we have in decades in the BC environment. So that has brought rental prices down. And so what you can see here is the average asking rent in Canada right now is 2,008. It is almost back to where it was in March 2023. So we've gone back in rental pricing in on average in Canada by 3 years. So we're still trending a little bit lower, so rents are going to be coming down a bit further. And if you're a landlord, you definitely have to be aware of that. If you have a tenant asking you for maybe a little bit of an adjustment, consider what the new market rent would be. And if you are re-renting a property, make sure you're aware of what the new asking price is for your type of property in your area, because again, we are back down to prices that were there 3 years ago in the rental market. There isn't much more positivity in how BC ranks in job creation in the private sector. We are last out of all the provinces since 2019 in growing private employment. It's pretty crazy when you think about it. It's yeah, last in the country for private sector employment growth since 2019. And to that effect, that and in combination with our ballooning budget and debt, British Columbia has once again had um, their credit rating dropped by S&P for the fifth straight time since 2021. And we boasted a top AAA credit rating back in the day, and we've gone down five straight times since then. What's happening on the construction oversight in that industry right now? Construction, anything that's broken ground is moving forward slowly. That will be the under construction. There's a lot there. They've really slowed down how quickly they're bringing completed properties to the market. I think most developers who have to move forward on construction are slow playing it, hoping that the market improves. Properties that have not broken ground yet and are in perhaps pre-sale mode are struggling, and many of those will not get off the ground. And there are certainly some projects that have been canceled, and deposits are being handed back. And so I do believe that give it 3 to 5 years, we'll get the counter experience to that, which is probably by 2030 or by 2032, we're going to have a shortage of inventory because of what's happening right now. Regarding months to complete, like I was saying, it's you can see here that everything's taking longer to complete because that's, I believe, an active strategy by the developers to try and outmaneuver this sluggish market we've been in for the last 3 years since the peak of April 2022. What's happening on a national level? Well, let's take a look. We have mortgage rates having come down a little bit, but they've been moving sideways with the Bank of Canada continuing to hold mortgage rates. So right now you get a 5-year fixed in kind of the fours. This is what I wanted to share with you. As you can see here, that we continue to move sideways with our current overnight interest rate. The Bank of Canada has not lowered it since last year. You can see at the height and where we've come down, and we're trending sideways with potentially with if inflation continues to go up with the war in Iran and the gas costs escalating, there's a chance that we could see an interest rate increase actually later this year. Canada unemployment is the unemployment rates at or the employment rate is comfortably holding itself. And it seems nationally that, we're doing better than the province of BC in job creation. Our growth rate, however, is at very at very lows. The growth rate in Canada averages 3.04% since from 1962 until 2025. And we're well below that since then. And so it's kind of alarming. The horizon, it does not have a lot of GDP nationally nor provincially. The confidence from business is stable, so it does appear that small business is still feeling stability and dealing with the headwinds that they've been given over the last several years and hoping for improvement. Our inflation rate is holding steady, but we're just going to start to see now the impacts of the higher oil and gasoline prices, which is, in the short term, going to hit your pocketbook as you felt in regards to gasoline when you fuel up. But now we're starting to see those prices embedded into shipping and embedded into the food costs, into the supplies, and it's not resolved. So it really will have an impact on inflation in the months ahead. I've mentioned this last month. It's pretty crazy. Our government debt to GDP in Canada, it used to average 82.13% from 1980 until 2024, and it reached an all-time high of 118% in 2020. And since then, we've been above. And so it's crazy when you think about it that the government has a debt that's higher than the annual gross domestic product that we create. And that switch happened in, again, 2024. And um, that's alarming. All right. So in conclusion, the economy is continuing to experience headwinds, and in regards to real estate, that is seeing itself with a lot of pause, a lot of buyers waiting to see what's happening, a lot of sellers not rushing to move their prices lower, but they are trending lower, and that's definitely what you see. There's a lot of relisting of properties, and there's a lot of new properties coming to market that might have been off market for 6 months, and now they're coming at a lower price. Certainly experienced sellers selling at a price today that they didn't say yes to 6 months ago, so they've lost value by waiting. There's several external factors that are influencing the buyer's habits. Elevated mortgage rates influenced by the rising bond rates and the risk of inflation being back on the table as an issue. Obviously, we have global geopolitical uncertainty, politically, particularly with the conflicts that are impacting the financial markets. And there's caution out there. These factors are going to tamper the demand in the spring market. And so it continues to be a slow market. So what does this mean for buyers? You got more choice than you've ever had in recent years due to higher inventory and due to a sluggish market. Stable pricing environment is reducing urgency. So you really have an opportunity to negotiate, and you especially have that in the apartment segment. The detached market's a little bit less than that. It's pretty stable. But you also have the opportunity to put together a really strong offer to protect you, the buyer, and give you ample time. And if you are someone that's upsizing, you can probably put an offer together quite comfortably that allows you with a subject to sale. Of course, every situation is different, and speak to your realtor. For sellers, pricing strategy is critical in this quote unquote balanced market that I really feel is a buyer's market. Detached homes continue to see strong demand relative to other sectors, and patience is required if you're a seller, as buyers are taking much longer to make decisions. We're in a market where, unless you have a really hot property, you can't rush it to a sale. There's definitely some properties out there that just need to have more time on the market and slight adjustments downwards. Whereas if you did a substantial reduction, I don't know if it would draw any more buyers to put pen to paper right now. So if you have any further questions after watching this, please reach out to me, Roland Kim, Realtor in Vancouver with Keller Williams, here to help you, and I appreciate you watching. Thank you.